morning, everybody. That's how we ride the roller coaster. It can be a roller coaster, right? Good morning, Ron. Good morning, everybody. Safia, killing it this morning. Nicely done. Whew. How's everyone doing? You guys feeling all right? Everybody ready? Kick a little butt, take a few names, chew some bubble gum, whatever it takes, right? Um, I'm a minute or two early, so I'm going to take just a second. Hey, good morning, Michael. Good to see you. I realize I'm a little bit ahead of schedule here. Not pushing up daisies, man. That's a win every day. Every day. I'm very much in a teaching mood today, and I'm very much in a learning mood today. So, guys, I have been nonstop with my brother this morning. Just to give you an idea, these are the pictures that I've taken this morning. Taken pictures, annotated. So everything that my brother will be teaching in his advanced class, I have decided to commit to learning because it's brilliant. Why wouldn't I, right? So I am back on simulator for a while because I'm not going to make the mistake of learning something new in a live market. It just doesn't make sense. So we're going to go through what we do today, guys. We're going to have a good time. We're going to talk about the same olds. We're going to talk about patterns and advantages, really, is what we're going to talk about. So, as usual, I'm going to start on Forex Factory. Hey, Joel, we're going to get going. We're going to take a look at news, guys. At 8:30 a.m., we had some high impact news. It definitely created a spike in the market. It absolutely made it a little untradeable, at least for a minute or two. And it wasn't necessarily what they were saying. It was just that they were saying something, if that makes sense. Don't trade. Like, I don't wake up in the morning on Wednesday and go, man, I hope the core PPI numbers are positive so that I can make a trade in this direction. What I do say is, is I know when the core PPI numbers are coming out, and let me show you what it did. At 8:30 a.m., right about here, the core PPI numbers came out. I was actually in a long position that I had to exit because news was coming, and it shot it all the way up in a matter of seconds, and then it shot it all the way down to Fibonacci support where the market appears to be reversing. So, a couple things. Believing in fibs, and I want you to see the reaction all the way down, guys. Areas break, pulls back to it as resistance, area breaks, pulls back to it as resistance, area breaks, pulls back to it as resistance, finishes the move to support. It's very powerful, making sure that you're on the right side of these key areas because these key areas are where decisions are being made. This is where the buyers buy, where the sellers sell, and that's kind of what we're going to focus on today is being able to understand when we have an advantage and being able to understand when the advantages go away. And I very much like to speak in terms of advantages because I'm just a rules-based trader. All I can do is pull the trigger. There's nothing else that I'm in control of. I'm only in control of whether or not, good morning, Luciano, my rules are met. And if they are, fantastic, I'm in a trade. And if they're not, I have to figure out a way to sit on my hands and do nothing. But every morning I go to forexfactory.com and I make sure that I'm not trading into news. Today is Wednesday, which means that we should have crude oil inventories coming out at 10:30 a.m. And guys, this is the first time I've ever seen them make crude oil inventories a medium impact news. And these are the ones that we look out for. We look out for the high impact, the medium impact. At 10:30 a.m., crude oil is going to make a decision, or they're going to announce the reserves. And there's always people waiting to make a move. And the other side of knowing that there's crude oil inventories, guys, and let me show you crude oil. Very often, they're going to begin to jockey for position. You're going to see a little bit of indecision, things moving, but you're also going to see, look at this, the market reverses and everything is strong, and there's a potential short, and the market reverses and everything is strong, and there's another potential short, and then everything is down and the path is clear, and there's another short. all the way down to Fibonacci support. And guys, this is what we're going to talk about today, how you guys can catch these moves, how you can recognize them, how you can take advantage of them. Um, and we're going to do that dun, 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 with a high probability trend trade. This is my first hour, guys, every morning is a high probability trend trade. And I'm going to warn you guys right now, I do have a furniture delivery coming sometime between 9:30 and noon. I don't know when, so if I have to break away for a minute, I apologize. Um, Everything that I talk about comes from the high prob or from the tutorial section on the education page. In the glossary of common terms, for those of you that are brand new, well, first of all, welcome to the class. Nice to have you. But if you're brand new, the glossary of common terms are going to talk about a lot of the things that you hear in class. Scroll through it, take a look, learn a little bit about it. But the most important one in here for new users is this definition right here, high probability trade. This is our focus for the first hour of class every day. The first hour revolves around the rules for this trade. The second hour and the third hour revolve around looking at your charts and giving you feedback and talking about the live market. But this high probability trend trade is defined as when each indicator on every chart agrees for the trade. This is when your triggers are the strongest. No termination conditions exist. There's no trouble spots between your entry and your target. Guys, this is the best of the best. This is the foundation. This is building a solid core so that you can grow with the software. And this high probability trend trade is a trade that typically wins 70 to 80% of the time. When you are patient to wait for the rules to be met, it creates confidence through the memory of success. But the most important thing that it does, and I'm going right back to the tutorial section, 3 trading rules, high probability trend trades, is this trade is going to make you a chart reader. This trade is going to teach you to read your indicators. And once you can read your indicators, it's really just limitless what you can accomplish with the software because you're going to be able to open up a workspace and take a look at it, and you're going to understand where the market is likely to go. This is a great way for you to identify potential profit targets. You're going to understand where the market is likely to continue, and these become entries for that highest probability trend trade. And then finally, you're going to understand where the market is likely to stop. And this likely to stop concept is when price reaches one of these key Fibonacci areas, we can determine whether or not it has the potential to reverse it or if it has the potential to break. But what you'll notice is that these key areas love to stop the market in its tracks. And you see it quite a bit. So we're going to use that concept to determine when we've reached these likely to stop areas. We're going to know not to take any more trades in the direction. You're also going to understand that when one of these termination conditions reverses the market, you're going to see it a lot. It sets you up for the highest probability trend trade that you can take. And this is the one that we're about to discuss the rules for. This highest probability trend trade that happens after a termination condition, this is the one that typically wins 70 to 80% of the time, guys. This is the one that teaches you to read your indicators. This is the trade that's going to give you the best chance of success as a new user. And really that's the goal, is to be successful, to build that confidence, and to build recognition and what the advantages look like. So we're going to use this high probability trend trade, and it's only 3 rules. That's it. It's not 3 rules with a bunch of addendums. It's literally 3 rules that happen on only 2 charts. And each rule is designed to give you an advantage, a very key advantage in the market. Your first rule says that your large chart must have strong trigger lines. And when this rule is true, it creates the advantage of momentum of a market that's likely to push in the direction of the trend. Rule number 2 says none of those termination conditions are in the way. None of those likely to stop the market areas. And again, when it's true, now we have the advantage of a clear path. So we're piecing these advantages together until it's time to look for our entry area, getting the advantage of a market that's likely at the spot where it's likely to continue. So we're going to take these 3 rules, and we're going to talk about them extensively. We're going to make sure that you can see them visually, that you understand what the words mean. And we're only going to look for them on 2 charts. You're going to hear me say it every day. I am a broken record, guys, without a doubt. Large chart leads the way. Large chart tells you to look for a trade. Large chart is what is happening in the market based on, where is my picture? What the large crowd wants. The large crowd moves the market. They create the direction, the momentum, they define the areas. The large crowd are the people with the most money that make the market do what the market does. We use this for our first two rules. The smaller chart is what the small crowd wants, the people that aren't capable of moving the market extensively, but maybe giving it a little shove in the other direction. So we use these two charts, large crowd, large chart. It will define the direction of the market, the momentum in the market, as well as um, the areas that we are going to react to. And then once this large chart gives me rule number one, those strong triggers, I have the advantage of momentum. Rule number two, I have that clear path. And when I have these first two rules met, and only when I have these first two rules met, will I turn my attention to the smaller, faster chart. And this becomes a refinement process of that broad stroke of a brush, putting me in the position to enter where the market is most likely to continue. So, um, three rules, two charts, and then guys, we're going to get into the rigmarole of learning the software, becoming a confident trader ASAP. And there's really two very key concepts that I need you to embrace to get there. The first one is that you post in the room, that you post your pictures, you post your questions. It doesn't matter to me if you're on day one, if you're on day 100. Um, I want to see what you're doing. I want to hear your questions, and I want to make sure that we get you clarity on anything and everything that you need clarity on. The only way that I can help you, the only way that I can give you a specific lesson to your needs is if you present in the room, post your trades, everything that you do. And then the second thing is going to be use a spreadsheet. So Nexgen gave you this spreadsheet. It's really just a trade journal. But every time you take a trade, you're going to record it. And every time you record it, you're going to be able to go back and study it the next day. And this is really the idea, guys, that you take pictures, that you write on your charts, that you annotate, that you tell yourself, as well as me, exactly what you were looking for, exactly why you did what you did, where you did it. And then you're going to be able to go back and study and say what worked and what didn't work and what felt easy and what made you nervous. In this trade journal, this little brief historical study each morning, maybe during news, maybe when the first coffee is going down, it's going to prepare you for the day. It's going to accelerate the learning, guys. And then off that same token, here's the copy of the spreadsheet. And this is great, right? This is your trade journal. But as you begin to see these trades transpire, as you go back and study these trades, you're going to fill up your personal trade looks and you're going to put these annotated charts in there so that you can come back and see exactly what it's going to take to get you into the market. And then finally, there's the client trades, guys. I steal these from the classroom all the time. When you guys show me an amazing trade that revolves around the advantages, I like to liberate it. I like to put it into the spreadsheet. And this third page is not only about 275 client trades where you can see the advantages, the entries, what the clients are doing with the software. It's also an opportunity to begin to work on management. Every time you take a trade, every great entry creates a manageable trade. So as your plan grows, you can begin to take pictures of how you're going to manage trades more efficiently. There's patterns that repeat over and over in the market. You're going to begin to recognize these as you grow with the software. Start taking pictures, and you can develop a plan that maybe creates an extra advantage for you as you recognize the patterns. And then, guys, there's the whole section. This is the Mark Novak section, the terminations, areas likely to stop the market. And these areas likely to stop the market were my biggest challenge when I started with the software, because what I found is that I began to embrace hope and I would trade directly into these areas. And I was notorious for breaking rule number two. But through participating in class, through posting pictures, through getting feedback from John Novak, who happens to be my mentor, um, I was able to change my habits, to stop trading into these areas that were likely to stop the market and increased my profitability considerably. So your path is post a lot of pictures. I want you to post every picture. Don't be shy. If you're not consistent every day, post pictures. If you're not making money every day, post pictures. If you're having challenges in certain areas with certain looks, post pictures. We'll talk about them. We're going to learn the rules for when it's okay to trade. That's the first hour. We're going to talk about the high probability trend trade. We're going to look at them visually. We're going to look at them, what they say word wise. You guys are going to simulate, and every time you simulate, I need you to post in the room. I want you to tell me what you're doing. I want you to show me both charts. I want you to show me your large chart and your small chart because I want to see that the advantages were present. I want you to write your rules on the chart. And if you're not sure what to write in the beginning, write the advantages on there with an arrow. Let me know what's happening. Because what we want to do is we want to associate a look with a rule. You want to get that correlation between the two. And I want you to show your timestamps. I want you to show your price because what I'm going to do is I'm going to line up your beautiful entries, your great exits on the large chart and the small chart. And you can help me do that by showing me where you enter, showing me where you exit. And guys, this picture on how to annotate charts, this is designed not so that I know what you're doing, because I'm not going to lie. I can look at almost anybody's chart in here and tell you what you're doing, tell you what you're thinking. But what it does for me is it lets me know that you know what you're thinking, that you know what you're doing. And we're going to begin to recognize patterns in the market together as well as patterns in you that may be hindering the forward progress a little bit. So you're going to simulate, you're going to post all your pictures, and we're going to work together to make sure that you're taking the correct trades. And then we're going to simplify 2 trades. We're going to talk about the highest probability trend trade that you can take, the foundation of your trading. And then we're also going to talk about what's called a medium probability trade, where we are going to use momentum to identify when areas are likely to break. I'm going to give you rules for both. I'm going to give you concrete management plans for both. Your job is to learn the trigger looks so that they become easy. Once again, that's what this third page is for, guys. Go through and burn these images into your brain. This is exactly what it looks like for the best trade that I can possibly take. And keep looking at them when they're not moving so that when you get to the point where you're looking at a live market, you can gauge, did I have momentum? Did I have a clear path? And just because the NASDAQ likes to put on a show, that right there becomes a high probability trend trade to get you to that next key Fibonacci area. And we're going to talk about how to piece it all together on 2 charts so that you can catch that move. Pretty cool when the market does it live for us. So we are going to get going, guys. We're going to talk about rules. We're going to talk about advantages. Every time you look at your charts, I want you to say, I have the advantage of, I don't have the advantage of. And we're going to piece it all together to turn it into a high probability trend trade. So everything starts with momentum. Rule number 1 says that I must have strong triggers. The only way that I can have strong triggers is if my trigger lines match the color of the background. If the background is green, I'm looking for green trigger lines. If the background is red, I'm looking for red trigger lines. Let these match up and it'll keep you on the right side of things. Strong triggers means that the small triggers, these solid lines, this faster moving average, breaks above the large triggers, the slower moving average. It's the space that's created between small and large that lets me know that the odds are favorable for the market to continue in the direction of the trend. The same is true in a downtrend. When the background is red, my triggers must be red. My small triggers, the faster moving average, must break away from the larger moving average, the large triggers, small below the large, space between the two. The odds are favorable for the market to continue in the direction of the trend. This is strong triggers defined, guys, and it really becomes easy to recognize. You're looking at the most current bar, and if there's separation between the two in the direction of the trend, you're golden. And if there's separation between the two in the direction of the trend, everything is good. And guys, this is the most favorable look for buying Fibonacci support on a smaller, faster chart in an uptrend, or for selling Fibonacci resistance on a smaller, faster chart in a downtrend. And on the large chart, it looks like these tails or these wicks, and we don't trade these because the large chart's a slow chart. It's a broad stroke of a brush. But through the small chart, you'll be able to pinpoint exactly where these tails are likely to happen. And the tops of these tails for a short or the bottom of these tails for a long becomes your entry on the smaller, faster chart. But odds favorable momentum is imperative. It's going to push you in the right direction. When the smalls work their way inside of the large, you weaken the large triggers. It becomes an anything can happen, up or down scenario. The advantage of momentum is gone. So recognizing momentum becomes pretty easy for you guys. Separation between the two is a market that's likely to push in the direction of the trend. When the large triggers swallow the small triggers, anything can happen up and down. Very often, it sets up a reversal in the market. And you'll see it here. Separation pushes the market down. Your triggers weaken and there's a reversal. Anything can happen triggers. From the reversal, we get odds favorable momentum. You're going to hear that in class all day long. There's one of those tails where you guys are getting long right up to your profits. And then we weaken the triggers again and the market reverses only to supply us with odds favorable momentum. Um, and then you get where rule number one becomes so effective, guys. You get this situation where the small are up but the large are down, or the trend is up but the triggers are down, and the colors don't match. And when the colors don't match, you can't have odds favorable momentum. So this is a transition period. This is a fight between buyers and sellers. This is where the average user, the person without the advantage of Nexgen, gets beat up in a little consolidation. This is where Nexgen users say, I don't have the advantage of momentum, therefore I choose to do nothing. I'm going to let them fight it out, let them work it out. Ultimately, someone's going to win and give me odds favorable momentum. But the more you study this momentum, the more you see it push the market in the direction of the trend, the more you believe that you don't have to be in every move, because 90% of your day is spent reading indicators. 10% of your day is just hanging out, waiting for those advantages. And if we go back to the live market, let's just take a look, and we'll use NASDAQ for example. I'm going to take everything off except my trigger lines, because trigger lines have nothing to do with areas regarding momentum. And this is nothing but triggers. And when there's separation, it pushes down, and when there's separation, it pushes up. There's that odds favorable momentum. Notice that weak triggers precede a reversal. Weak triggers precede a bigger bounce up. It happens a couple times. But when there's separation, one of those tails, the market continues in the direction of the trade. When there's separation, one of those tails, the market continues until it weakens and creates a larger push. Is everybody good? Odds favorable momentum. It's going to happen all day, but not all day, if that makes sense. You're going to see it off and on throughout the day. You just have to wait for it so that you can have that best of the best advantage. And right now we're watching a market that's pushing down. There's one of those tails potentially forming. If it makes a down bar, there's your tail with odds favorable momentum. Pretty cool, right? When the live market gives you an actual example of what we teach every day in the room. And then when I put my indicators back on, you're going to see that the market came from a fib. The momentum was strong. There was a pullback, and it went to the next fib. And guys, this is where Nexgen users make their money. This is where Nexgen users get paid, right here at those areas inside of favorable large triggers. So rule number one is going to give me the advantage of momentum. Once I have the advantage of momentum, I have to make sure that I'm not trading into one of those termination conditions. And I'm going to warn you guys right now, my wife just sent me a text. My furniture is going to be here in the next 20 minutes. So we may have to take a small break. I apologize in advance if I say, hey, got to go get the door. Once I have momentum, I have to make sure I'm not trading into an area. I have to make sure I'm not trading into some place that's likely to stop the market. These termination conditions are nothing more than places where decisions are made, guys. This is where buyers buy and sellers sell, where profits are taken. And the areas that we're looking for are divergence high lines. This magenta line that prints from a pivot. When the buyers are in control and the sellers steal their momentum, you're going to get a magenta line. When the sellers are in control and the buyers steal their momentum, you're going to get a cyan line. These lines let you know that there was a loss of momentum in the market, nothing more. But when we use the recipe for termination conditions, we can determine whether or not they're likely to stop the market. We're also looking for red resistance, blue support, yellow one-to-ones, and in some cases we'll even use these mid bands as potential termination conditions. This is also an awesome roadmap for what you're looking at when you open up your software. But in order to determine termination conditions, I always do that and it always feels odd. It's a two-part process, guys. The first part is price reaches an area, and I'd like you to write that down. I'd like you to get it tattooed backwards on your forehead. Look at it in the mirror. Price reaches the area. These price bars reach one of those lines, whether it's support, resistance, divergence highs, yellow one-to-ones. But when your dynamic Renko bars come down and make contact with an area, in this case support, decisions are being made. Sometimes it means that the sellers are going to take profit. Sometimes it means that there's a group of buyers waiting to enter the market. But what happens is a reaction. It either creates an untradeable bounce, maybe it reverses the market, or maybe the area breaks. But the reality is, and I want you to embrace this idea, that you have no idea what it's going to be. All you know is that price has reached a decision-making area, and if your trigger lines remain above that area, no more short trades into support. And on that same token, if price works its way up to resistance and absolutely none of the trigger lines are able to get above resistance, sit on your hands and wait for the reaction, guys. Keep yourself safe. This should be a giant red flag waving, letting you know that the path is no longer clear. So if we reach support, the triggers remain above, don't trade. Don't go short into that area. Look at the giant bar that forms off of it on your large chart. Untradeable, would take you right out of a short position. We're going to wait for a clear path. Your highest advantage comes when an area breaks. And an area is broken. In this case, support is reached. The triggers remain above. I know that I'm not going short yet because I don't know what the reaction is going to be. And you can see a little tail here where they had a reaction. But once my small triggers and my large triggers get to the other side of this area of support, it begins to behave as resistance. You'll notice that support becomes resistance. All my trigger lines are below. Now the path is clear. Now I have the advantage of rule number 2, not trading into termination conditions. I have room to my target. I also have odds favorable momentum from rule number 1. And there's one of those tails, guys, that pulls right back to resistance that used to be support. You guys are going to nail your entries right here and be able to take it down to that next key Fibonacci area. And just to give you an idea of how often this happens in the market, support breaks, pulls back as resistance, behaves as resistance, support breaks, pulls back as resistance, resistance breaks, pulls back to support. All day long, guys, resistance breaks, pulls back to support, continues in the direction. These termination conditions, price reaches support, absolutely no trigger lines break. We know not to go short, but because of the momentum and because we hadn't reached it yet, we knew exactly where we were going if we took a short trade. So termination conditions will not only keep you from trading into areas, it also gives you a good idea. Terminations off in the distance are really just targets. Here price creates a pivot. The market goes from down to up. The seller or the buyers stole the momentum from the sellers. I know that because the cyan line prints. This is not a termination condition, guys. Price creates this cyan line. Price doesn't reach it. And that's important when you talk about the recipe for a termination condition. And there's a bounce. And then price reaches the divergence low. When it reaches the divergence low, all you have to do is ask yourself, where are my trigger lines? They all remain above the divergence low. You can see that price tries to exceed it, but the triggers cannot. We're focused on triggers, not bars. This creates a pivot stop out of a prior divergence line. This pivot stop out is powerful. It can reverse the market. In this case, it does. And if a termination reverses the market, we're going to call it A strong bottom. And a strong bottom is the precursor for the highest probability trend trade long that you can ever take. So price reaches, triggers remain above, no trade. These pivot stop outs are even more powerful when you couple them with Fibonacci resistance or support. And this is a great example of how we have to sit on our hands and be patient for a little bit. Price reaches resistance, the triggers remain below. None of us are going long because we don't have a clear path. From here, price pulls all the way back to Fibonacci support. It pulls all the way back to that mid-band area. Notice that all of my triggers remain above. Once again, I'm not going short, even with the red lines, even with the smalls below the large, because I've reached an area that may create a bounce. That potential for a bounce is amplified if the small or if the large triggers remain a full bar away. The gap created between price and these large triggers is likely to close if price reaches an area. So not only is it a termination condition because of trigger location, that snapback is very likely to happen because of the distance the large triggers are. And it does snap back and it goes back up and it tests resistance. No triggers break, no trade, not going long. It also hits the divergence high, creates a pivot stop out. Once again, the triggers remain below. I'm not going long. And a second set of resistance. All the triggers are below. I'm not going long, guys. 3 terminations in one spot. Well, this one reverses the market. This one gives me odds favorable momentum. And this one has price that has not reached blue Fibonacci support yet. This tail right here becomes your highest probability opportunity to enter the market. This is a high probability trend trade, potential entry that happens after a termination condition, what we're going to call a strong top. So guys, is everybody cool with the idea? If price reaches an area and none of the triggers get through that area, sit on your hands, do nothing. You don't know what's going to happen. You don't know if it's going to bounce, if it's going to reverse. You don't know if there's going to be a giant fight. And this picture is very much that giant fight. And it illustrates just how powerful these termination conditions are. Price is railing down with odds favorable momentum. And when it hits this area, you guys know not to go short because none of the triggers have broken it. Can I get a why in the room from you if you're with me on this? I like to make sure that that simple recipe is solid for you. If price reaches an area and no triggers break, sit on your hands and do nothing. Thank you, guys. And look at the fight that ensues. Whoops, guys, that's my furniture. Do me a favor, trade, watch the market, talk amongst yourselves. I need about 5 to 7 minutes, and then I'll be right back. I'm so sorry. Back in just a second, guys. may have been the fastest furniture delivery in the history of deliveries. That's pretty good, 3 minutes. All right, so we're talking termination conditions, guys. We're talking about making sure that you're not trading into areas likely to stop the market. Um, and that's exactly what we're seeing here. And I want to share this picture with you because this is such an important representation of the patience that's needed to be successful. Um, Even with odds favorable momentum, we reach yellow one-to-ones. None of the trigger lines break. Everything remains above this area acting as support. You guys know not to go short. Don't trade into an area that may reverse the market, that may create a bounce. And look at the bounce that's created, guys. The buyers push back. Sellers maybe take profits. Buyers try to get into a position. And you see that ramp up right off of support. Well, the sellers don't seem to be done. Maybe they didn't hit their goal. Maybe they want to fight the buyers a little bit, and you see the market come back down, and it goes up, and it comes down, and it goes up, and it comes down. And guys, this is the 90%. This is the 90% of your day where you're doing absolutely nothing. This is the 90% of the day where there is not a statistical advantage. You're caught in the crossfire. The triggers don't match. We can't get through areas. There's just nothing to do except nothing at all. And that's the hardest thing that you'll ever do. Ultimately, small and large get above resistance. Look how it behaves as support. The small triggers have found their way outside of the large triggers. And there's that entry, guys, with momentum and a clear path. This is where Nexgen users get paid. This is where you're going to enter it right at the bottom using the small chart and take it all the way up to Fibonacci resistance. And guys, this is your 10%. The 10% that's spent waiting for the advantages, and when they're present, it's time to get paid. It's what you do when there's nothing to do that's going to define how successful you are when you're taking advantage. So is everybody comfortable? We're good, right? Price reaches an area. If none of the triggers break, let's sit on our hands and do nothing. Let's just wait. We don't have the advantage of a clear path. Once the small and the large get to the other side of an area, we consider that area to be broken. The path is now clear. Even in this case, look with the momentum. There's one of those tails, and off it goes to the races, guys. It can be this simple if you allow it to be this simple. So that's using lines. That's using areas to make sure that you're not trading in termination conditions. I am going to share one more look with you. And this look is the only termination condition that I'm going to look for in a small chart. The only one that I am going to respect on a small chart. And it's three divergences in the same location, three losses of momentum in the same location. Guys, it can terminate a trend. It can create a push that's untradeable. It can ruin your party without a doubt. 1, 2, 3 cyan lines, 1, 2, 3 magenta lines. Guys, this can stop the market in its tracks. It becomes more powerful when your trigger lines go from odds favorable to anything can happen. You're seeing the weakness and you're seeing the loss of momentum, and it's just telling you don't take any more short trades. Don't take any more long trades. And it becomes more powerful still when that final pivot is higher than the previous from a low or lower than the previous from a high. We get that head and shoulders pattern. Guys, this says don't go short. This also says that if you are short, jump ship, things are changing, right? And if you are long, it's okay to get out. It's okay to not hope. You've lost your statistical advantage. You're going to see this look at a low. You're going to see this look at a high when the market appears to be turning from nowhere, when you have a clear path and then it just goes up. Those three divergences will help you see it. When you have odds favorable in a clear path, you're going to see those divergences. It's going to help you avoid that final long. So those three divergences are just going to help you identify change. And then Steve B, do I consider this a fib on the small chart of termination? I do not. I let the large chart lead the way. I make sure that my large chart defines direction, the momentum, the areas, and then what are these little lines on a small chart going to do for us? And I like this right here. This fib on a small chart pushed us right back to our perfect entry. A lot of the times you'll see a one-to-one or a fib on a small chart, And all it does is it creates the perfect bounce to get you to your perfect entry, Steve. Um, so for example, this one-to-one is not a termination condition because termination conditions are defined on my higher time frame. Does that make sense? Which means that if I have rules met, I'm using the lines on the large chart for potential targets. And doesn't this look just like the manual? One-to-ones, no triggers, pushes back to the mid-band up to resistance, no triggers, and down it goes, right? There's a lot of you, especially if you're going to be taking John's class, that are short from this area right here, and you knew exactly where the market was likely to go. Um, Pretty outstanding look when termination conditions. No worries. Steve, ask every question, man. Ask every question. Because every time you guys ask a question, the class is better. Um, I like to remind you of that. I go through what I go through, right? I talk about the rules, I talk about the looks, but every time you guys need something and you ask it in the room, oh my gosh, it makes it a better classroom. So don't be shy. All right, so we have, good morning, Jose. Guys, our large chart defined direction. The background was green, it's up, right? The large chart defined momentum, small's above the large, 1 bar on the large chart. Large chart defined the areas. I broke above this one and I haven't reached the next one. My large chart says it's time to look for a high probability trend trade long. So I'm going to go to my small chart. And on my small chart, rule number 3 says that I'm going to use a limit order. And that means that I'm literally going to wait for the market to come back to me. I'm going to use a limit order at an area, meaning that I'm going to have that order waiting at either fibs, mid-band, or yellow one-to-one. But the key is I want those areas to be nestled inside of what we call favorable large triggers. And favorable large triggers means that your large triggers on the small chart, as well as your synthetic triggers on the small chart, are overlapping. They're one on top of the other, two snakes riding piggyback, hand over hand, however it helps you see it. But the tighter your large and synthetic are on top of one another, the smaller your window of opportunity becomes. The smaller the point where the market is likely to continue is. And for you guys, that means the least amount of risk possible. What a wonderful concept going into a trade, especially as a new user, having the smallest point of entry, creating the least amount of risk. So we're going to use these favorable large triggers. We're going to look for areas inside, and we're going to let that small crowd do their thing, guys. We're going to let that small crowd, when the large crowd says up, when the large crowd says it's clear, when the large crowd says the momentum is its absolute strongest, we're going to wait for these yahoos to give us a push right back to our perfect entry. So when we do that, look at that, odds favorable, there's a pullback to resistance inside of favorable large triggers. Love it when that happens. When we look for our entries, everything says up on the large chart. This is what the small chart looks like. The small chart should have strong triggers. The large and the synthetic should be one on top of the other. And at this point, you've made the decision. It's time to look for an entry. So identify the areas of support for a long trade that are falling within the favorable large triggers. I'm looking for fibs, mid bands, or yellow one-to-ones. All I've done now is I've identified this could be my spot, but I need the small crowd to do their thing. I need a retracement, a tiny push down against everything pushing up to happen. And guys, this begins with a reversal bar. And at the time of the reversal bar, all you have to do is draw a box from the highest point of your triggers to the lowest point of your triggers. And then inside of that box, you're going to look for areas from the highest point of support to the lowest point of support. This is your window of opportunity. This is where the market is most likely to continue. This is where you have identified where it's time to enter the market. And you're going to activate a limit order right at the top of your window. Because I want you to remember, on your large chart, you had odds favorable momentum. On your large chart, there was absolutely nothing in the way. We're not going to stumble over a couple pennies and drop it at the bottom. We're going to catch that momentum and that tiny push, and your limit order goes right at the top of the window. And if the market decides to come back, You're in a long position. You're in a long position with the advantage of momentum. You're in a long position with the advantage of a clear path. And you're in a long position now, having entered the market where it's most likely to continue. Guys, this is the part that I want you to practice for 20 days. When everything says go on the large chart, wait for the reversal bar. At the time of the reversal bar, draw a box from the top of your triggers to the bottom of your triggers, not the window, right? This is where we're looking for the window. Your window extends from the highest point of support in a long trade to the lowest point of support inside of favorable large triggers. This is where the market's most likely to continue. And guys, if the market pulls back to the top of your window, you're in a long trade. You're in a long trade with all those advantages. You're feeling great about the world. You have momentum. You have a clear path. You have everything that says this market is likely to continue. But remember, you created a window, right? So there's no reason that we should ever be alarmed if it goes to the bottom of the window. There's no reason we should ever panic or worry if we get a couple negative ticks against us because we are still within the area where the market is most likely to continue. And then I really think the brilliance of being able to find with clarity where the market is likely to continue is it gives us the opportunity to know where the market shouldn't go. If I'm going to stay in this trade, I don't want it to go beyond my window. I'm going to set a protective stop 4 or 5 ticks below the window of opportunity. Typically, this is about 12 to 14 ticks. It may be 17 to 18. It may be 6 to 7, but our stop goes where the market shouldn't. And if that market, for whatever reason, if it decides to be wrong that day and it extends beyond the window and hits my stop, I'm going to exit that position, guys. I'm not going to stay. I'm not going to hope. I'm not going to wish or want. But what I'm going to do is I'm going to say that I had the advantages in place for a trade that typically wins 70 to 80% of the time, which means that 20 to 30% of the time, I'm going to lose. And that's hard for a lot of people to grasp. What do you mean I have to take losers? I want to win every trade. Losers make me unhappy. Guys, losers are a normal, natural part of a positive equity curve. But if you take trades with the statistical advantage, something that has been proven to win more than it loses, you'll get to the point to where you never miss this trade, ever. Because you know in your heart of hearts, through your study, through the repetition, through your participation, that 70 to 80% of the time, this is the most likely outcome, guys. And it's virtually impossible to blow out accounts on 80% winners. I've seen it happen, but it's really hard to do. So guys, this becomes your focus for 20 days. This becomes your focus as you learn to read the software. I've also on the spreadsheet that you have that I'm going to give you right now, I've gone through the entire scenario for a short trade as well because I want to make sure that you guys can see it coming and going. One of the beautiful things about futures trading is that we can make money go in either direction. It doesn't have to be up, it doesn't have to be down. But what we do have to do is let the large chart lead the way. Let the large chart say that it's time to look for a trade. Um, Odds favorable momentum. Notice that all the areas, the triggers are below. They're now behaving as resistance. Large chart says look for a trade. So I wait for the reversal bar on the smaller, faster chart. I don't worry about one divergence. I don't care that it's close to a fib. All I want is a reversal bar telling me that it's time to look for my window of opportunity. So I'm going to draw a box, either mentally or literally draw the box. And I'm going to identify my favorable large triggers from the highest line of my triggers and then from the lowest line of my triggers. Steve B, I use Snagit. Um, I use Snagit. It's like 63 bucks. Jose, I haven't checked the volume on it, but earlier today Gary posted a picture and December is still less than January or more than January. And typically crude rolls today. but the first day or two doesn't work. It's like $63, Steve B, but it's got all the bells and whistles. I love it. And if you're going to do this for a living and you're going to study with pictures, guys, it's a great investment. You're welcome, Jose. So, guys, give me a Y if you're with me. We're going to go through the whole entry sequence. Once the reversal bar prints, look at your lowest line to your highest line of the triggers. And this is where a lot of people make a mistake here and there, is they believe that this is where the market is likely to continue. But the reality is it's from your lowest point of resistance, Fibonacci, magenta midband, yellow one-to-ones, to your highest point of resistance, red Fibonacci, yellow one-to-ones, magenta midband. So do you see how the window becomes so much smaller? The window of opportunity extends from the lowest point of resistance to the highest point of resistance. You've just identified where the market is likely to continue. So your job is to put a limit order, a tick or two below that lowest point of resistance. To say to yourself, because of the momentum on the large chart, because of the clear path on the large chart, I'm going to be a tick or two below resistance, and the only thing for me to do now is be patient. And if the market comes to me, I'm in a short trade. I'm in a short trade with the advantage of momentum. I'm in a short trade with the advantage of a clear path, and I'm in a short trade having entered where the market is most likely to continue. Guys, this is your focus for 20 days. Give me 20 days working on entries, 20 days getting in at the right spot, 20 days of putting two charts together to get in where it's most likely to continue. And what you're going to find is that great entries create manageable trades. So I'm going to give you some tools to help you identify. Whoa, that's small. Hold on just one second. I'm going to give you a high probability trend trade checklist, guys. This is a checklist that does nothing more than define your entry. And it asks four simple questions. Is the market coming from a good top or bottom? Is it coming from a termination condition that creates a full reversal? If it is, mark yes. If it's not, you can still take that amazing trade, but you're going to use those divergences on the smaller chart to help you manage out if three show up. Do I have odds favorable momentum on both charts? No termination conditions. Price has not reached one of those lines. And then finally, is there an area inside of favorable large triggers for entry? I've never had anybody in the history of this checklist do worse than 70% winners, guys. I've had people come in and you can hear their brains saying, Novak's full of beans. This is crap. It'll never work. And what I'm going to do is I'm going to test it historically. I'm going to go back 300 days and I'm going to prove that he's absolutely full of crap. And I hope that you'll do that as well if you're a new user, because he's still with us. He's one of our biggest advocates. Guys, once you learn how to enter the market, everything else falls into place. Once you can recognize these advantages, everything comes together. We're building this foundation, turning ourselves into chart readers. For you guys that are visual, the exact same checklist. This is a termination that creates a full reversal. Here's your momentum. Here's your lack of momentum and exactly what it looks like, what it means to you. Price reaches an area, no triggers, no clear path. Here the path is clear. And I've included when areas have the potential to break, using that momentum to potentially smash through an entry, but it's not a clear path. And then, guys, here's your window of opportunity going both directions. Study this each morning, just a little bit. Give it 5 minutes to remind yourself what you're looking at, what you're looking for each and every day. Because what we're doing is we're creating recognition through repetition. Every time the rules are met, every time you see it, go put it in your favorite looks, right? What's the perfect long? Let's see. It's odds favorable momentum. It's a clear path, and it's a pullback to support inside of favorable large triggers. And guys, this picture shows you how to study. This picture reminds you that we don't trade tails, that we don't wait for tails to form to get into the market. Otherwise, the market's all the way up here. We can pinpoint where this tail is most likely to form by finding support inside of favorable large triggers, but we can use these tails as a study tool watch this, is when I have momentum in a clear path, if I circle a tail and scroll back to my small chart, where is it? Whoops. Right back to that resistance, right? And then odds favorable and everything says down and it's coming from a termination. That's one of those 50-50 trades, but right to resistance. And then everything says down. Support breaks, it behaves as resistance. Not all of these are going to be high probability trend trades, but what you're going to find is that ultimately you're going to be able to catch these. And then Steve B, do you see how that 1-to-1 gives me a bounce right back to resistance right there inside? Pretty awesome, right? Thank goodness for those 1-to-1s. It got us right where we wanted to be. So guys, you can go back on any market. You can go back on any time frame. Um, and you can start looking for these opportunities. And if you take off everything but trigger lines so that you can focus on entries, we'll do one together. Let me load up a template that doesn't have anything other than trigger lines. And this is the S&P. So we'll talk about just how effective it can be. Um, and we're going to start on the large chart, guys. We're going to start and we're going to look. Does everybody see that I have odds favorable momentum? That the small are below the large, that the large are wide, they're angled in the direction of the trend. All we're doing is defining an entry real quick. When I have this and I haven't reached a line, I look at my small chart and I wait for a reversal bar. And there's my reversal bar. And at the time of the reversal bar, all I have to do is look at the areas inside of my triggers. This becomes my window. And it bounces and starts to head down. But the reality of this one is that the market happens to be trading right into Fibonacci support, which means that I've given away my clear path, which means that rule number 2 isn't met, which means that even though the pattern did what the pattern does, I'm not taking this short trade because I don't have a clear path. And what's happening now in the market is a great illustration of why we don't trade into termination conditions. What's happening in the market up here is a great illustration of why we don't challenge those termination conditions, because they can reverse the market, they can reverse the market, they can reverse the market. Pretty cool, right? So this is your first 20 days, guys. Let's focus on the best of the best. Let's focus on getting into the market where it's most likely to continue. And then here on crude oil, we'll see what happened. Opportunities all the way down to Fibonacci support. It pushes up. 3 divergences in the same location, push it lower. But now my smalls are down, my large are up. I'm dissecting a key Fibonacci area. And look at the indecision on a smaller, faster chart right around these fibs. If you don't think decisions are made here, guys, there's your fight right there. No reason to get caught in this. We don't have the momentum to push through. We don't have the direction to go down. We're in a holding pattern. This is your 90%, waiting for an opportunity. And then finally, I'm going to give you guys one more gift. And this is the KISS plan. This is the Keep It Simple plan. This was designed, and I'll tell you the history of it. This was designed when a gentleman called me on the phone. I had one of the salespeople say, Mark, Bobo, Steve, Susie Smith needs help. Did I make it so you can't tell if it was a man or a woman? They basically are losing their butts every day. And I said, okay, have them call me. And they called me. And this person that called me said, I'm trying to catch everything and I'm catching nothing. I have rules for a trend trade, for an HVA trade, for an edge trade, for a counter trend trade, for a momentum trade. I have a rule for a gap theory trade. And Mark, I'm telling you, with all these in my arsenal, I'm not finding jack squat, and I'm getting my ass handed to me, and I keep blowing out accounts. And of course, my reaction is, holy crap, that's a lot of things to look for, right? That's a lot to look for. To look for 6 different trades on 3 different markets, you can be looking for 75 different things. So we created, I said, let's keep it focused, let's keep it simple. Let's look for the absolute best of the best first, and then let's grow off of that. And that's where this KISS plan came, and this was years ago. And guys, this is a stepping stone. This is designed to keep you focused on the best of the best. This is designed to optimize your chances of success with that high probability trend trade. And with that 50-50 trade, that trade where areas have the potential to break. This checklist takes years of study and breaks 2 trades down into their highest probability scenario. And then as you study, as you get simulation, when you get feedback in the classroom and you practice, you're going to create a plan that works for you. And what you're going to find is that there's a lot of people in this room that are no longer taking high probability trend trades. There's people in this room that are taking momentum trades. And I love it. I love seeing it because it means that you've learned to be a chart reader and you've taken your ability to read charts and created a plan that suits you. Until you can do that, this is going to keep you on the right side of things, guys. And it's a simple plan for consistency, and it starts with never fighting the large chart direction or the trigger lines. Just don't do it. There's no reason to. You don't have to predict. All you have to do is react when the rules are met. So you're defining entries. You're taking 20 days and all you're doing is getting in at the right spot. And guys, I get absolutely giddy when I see new users get in at areas inside of favorable large triggers because you're on your way. You're minimizing your risk. You're maximizing your profit potential. So just focus on entries. Take a lot of pictures of entries. Fill your spreadsheet. This is what it looks like. This is what it looks like. Mark said this was a high probability trend trade in class. Steal the picture. Put it in your spreadsheet. Get to where you can enter the market. Because great entries create manageable trades. Great entries for the new user are very mechanical, very methodical. Um, it's designed to pull the emotion, to pull the opinion out of the market. Your management plan, if it's very straightforward in the same fashion, becomes the best plan for new users we've found. And everything about your management plan is if then. And it stems from if I get into the market at resistance inside of favorable large triggers, if I get into the market at support inside of favorable large triggers, then my stop goes where the market shouldn't. My stop goes 3, 4, 5 ticks beyond that highest point of resistance, that lowest point of support, because if the market goes up here, I no longer want to be in the trade. And guys, small losses are a normal, natural part of a positive equity curve. So there's only 2 possible scenarios. You don't have to move stops. You don't have to wish, want, hope, anything. You're either going to get stopped or the trading gods are smiling and they're going to give you a reversal bar in the direction of your trade. And this reversal bar lets you know that now the momentum is winning, that now the clear path is winning, that area inside of favorable large triggers provided the bounce that you were hoping that it would bounce, that it would provide. And now you're going to adjust your stop. You're going to go 2 ticks above or below the reversal bar in the direction of your trade. And then once again, it's hands off. Roll 6 feet back from the monitor, get your hand off the mouse, and you're either going to take a small loser, which is cool, or it's going to hit your first target. This first target frustrates the hell out of home run hitters. This first target, man, it's just not what they want because most of you are like, well, I can't make a living off $100. Guys, it's one trade in a sea of many. And none of you would be upset if I walked up to you and handed you a $100 bill. Everybody would be like, hell yeah, $100, right? So this first $100 target, guys, it isn't designed to make you rich. What it is designed to do is create a very obtainable goal with all the advantages in place. It's designed to give you confidence through the memory of success. It's designed to make you feel good and comfortable because you heard NinjaTrader tell you that your profit target was reached. And then you're also going to go break even, which I'm not going to lie, is pretty asinine. You're just chumming the waters there because really there's fluctuations in the market, but we go break even for the brand new users, for the new people, because now it gives you the confidence to trust every advantage that was on the large chart. It gives you the confidence to trust the momentum, to trust the clear path, and it makes it easier to hold for the second target. And if you reach the second target, it's only $200, which means that in the highest probability trend trade that I teach, you have the potential to grab $300 through the most conservative, pragmatic, opinionless entry and management plan ever known to man. And $300, it's funny, it's only a $200 difference, but people go, yeah, 300 is great, right? Because $300 once a day, and if that's all you do every day, is $1,500 a week, which really turns you into a $6,000 month and a $72,000 year. And one of the battle cries that the most successful traders that I know, they don't care about all the trades. They don't care about every trade. They're not looking for every look. What they do is they turn that two lot into a four lot and turn their 72,000 into 144,000. And then they turn it into an eight lot, and suddenly they're north of $250,000 from one very high probability, repeatable, provable, pragmatic approach to entering the market. And you'll see it in this room. You'll see people annotate their charts base hit. You'll also see people take $100 trades on 10 lots, and then it's a $1,000 trade, right? If you have six contracts and you take five of them off, that's $500 in a matter of seconds. Um, and that's kind of the idea, guys, is give yourself the best of the best. Give yourself the highest possibility for success. Give yourself the advantage of momentum, the advantage of a clear path, and the advantage of a market that's giving you everything you need. Notice that we never got one clear sign to go short, ever. Weekend triggers, area didn't break. But can you see the fight that ensued? Weakness at support, it pushes up. It retests. I don't have good triggers. It comes up to the mid band. It's a termination here. Pushes back to support. And now I'm just waiting for everything to line up. I'm waiting for everything to come together. I'm looking for that momentum. I'm looking for a clear path. And I can tell you guys right now that there was a trade that you'll catch eventually that happened right about here off that good termination, which would have you in a long position with all of the momentum because the termination created the full reversal. And let's see if it pulls back to support inside of favorable large triggers with momentum because this area has the potential to break. And if it's going to happen, it's more than likely going to happen somewhere right around this mid band. And we'll just see what happens. It's not a clear path because my large triggers aren't above the divergence high. But because the termination creates a full reversal and gives me odds favorable momentum, guys, you already have your risk established and it's virtually nothing. And if all this momentum decides to push the market up, we're going to look for key Fibonacci areas above. And that's what we teach every day, guys. This is our setup. These are our rules. Make them your rules. Your first profit target was already hit. You're already break even. You'll hit $200 long before you ever get to that fib. And if you get hit break even, no worries. It's money in the bank. And this is what we do every day. Guys, are there any questions about the high probability trend trade? Are there any questions about momentum, about termination conditions? Any questions about finding that area inside of favorable large triggers? Because I'm going to tell you right now, if you focus, if you keep that KISS plan working, if you fill up your spreadsheet, and most importantly, guys, if you participate in class and ask every question that you can think of, you're going to get to where you want to be. No doubt in my mind, you will get out of the software what you put into the software. And that's my first hour every day. Every day the same thing. Do I have new people in the room? I'm looking right now. I don't always get a list of the people that are new, and sometimes they get lost. Guys, if you're brand new and you have a question, I want you to ask. I want you to raise your hand. I want you to say, hey, Mark, let's talk about this. And then let's go a step further. Guys, if you've been with me for a year and you're coming back to it, if you're on a lease and you're trying to get consistent, if you are just not where you want to be, Take advantage. Be stingy and selfish with the time in this classroom because every time you post, it's a private session for you. Every time you post, it's a one-on-one conversation. Every time you post, it's an opportunity for you guys to get to where you told us you wanted to be. I can't see your faces. If you're embarrassed about posting under your name, change your name, change your gender. Absolutely. So right-click order methods. Thank you, Michael. We use limit orders to buy or sell the market, right? So we literally wait for the market to come to us. If I right-click on the chart below the current price, buy limit 1 is my first option. And if I click that, it puts in a limit order. If price comes down and touches this order, let's see if we can make it happen. If price comes down and touches the order, come on, price. I'm in a long position. And it's really that simple. And then if I right click on the chart above price and hit sell limit 1, if price reaches my sell limit, it puts me in a position to the downside. And this is how we're going to enter the market. We're literally going to be able to wait. So let's say hypothetically, I'm looking for a long trade and my rules say that it's coming from support. I'm going to right click and I'm going to buy limit and I'm going to do it just above support right here at the triggers. If that's a rules-based entry, it's not. But if it were, I would literally wait for the market to come down to me. And if it does, I'll be in the position. And if it doesn't, well, then I won't be in the position. If we're using the mid band, we'll see if it'll come back to us. And we're waiting for a pullback. It's not inside of favorable large triggers, guys. This is not a rules-based trade. But you see how I can wait for the market to come to me rather than chasing the market off in the distance. Let's see if we have something setting up to where we could actually do it as a potential entry. Not so much. They're dancing a little bit here. I just don't have one setting up right now, Michael. But that's what it is. If you click above, it'll ask you if you want to sell. If you click below, it'll ask you if you want to buy. And that's perfect because if I'm looking for a long trade, I want the market to come down to me. So clicking below sets me up for that long position. And if I'm looking for a short trade, I want the market to come up to me to my short position. Does that help a little bit? And then, of course, every time we enter a trade, whether it's 8 or 7, you want to have an ATM strategy. You want to have something in place that says, if I enter the market, I need stops in placement. So, Michael, let's find an entry, and we'll do it together real quick. Let me get off of the NASDAQ because the NASDAQ, guys, this is NASDAQ is not a learning chart by any means. Um, Let me find just a really solid looking entry. And we'll do it together. Let me get everything off the chart so that there's no noise. All right, so Michael, everything says up on the large chart. Absolutely, Kev. I have odds favorable momentum, right? And I haven't reached an area. Can you see how rules 1 and 2 are met? This is the most important part because the large chart leads the way. It's important that you understand that the separation between the small and the large, that we haven't reached a key area, this is what lets me know that it's time to look for an entry. So far, so good, Michael? On the smaller chart, we wait for a reversal bar, guys. We wait for something that says that market is going to come back. So when I identify from the reversal bar, I'm looking at from my highest point of support to my lowest point of support inside of favorable large triggers. I wonder if I can make this easier to see. I think that's easier. All you have to do, Michael, is right click on the chart right here and buy limit 2. Whoops. Guess where the market's trading off screen, guys? But that's exactly what it did, is I'm making sure that we can see it. Is the market pulled back from the reversal bar. I had the order waiting, and when it hit it, I entered the market. So you're on 8, right? Let me close this out because I'm not even trading the most current. So from yours, let me open up your picture. Sell limit 2. So if you want to go short, sell limit 2. Right click, click on sell limit 2, and then that's going to set up your limit order for a short trade. And then just do me a favor, Michael, wherever price is trading, click below it, right click below it, and you'll see that your sell limits turn into buy limits. These reverse. Because in order to sell, the market has to come up. And they do look a little different. So we're using limit orders. That's it. We're just using limit orders, and we're waiting for the market to come to us. And if it does, then we get in that long position. So let's go to the live market and see if small's above the large. Large are wide, they're angled in the direction of the trend. I'm waiting for a reversal bar. If I get a reversal bar, see the mid band, the fib, I'm going to right click and buy limit 2. And I'm going to wait for that market to come back to me. And it's either going to come back or it's not. And this goes back to Steve B's. I'm hoping that this 1-to-1 gives me a push, right? And that's it. It's just a matter of waiting. And you can move them. There's my highest point of support. There's my lowest point of support. I'm just waiting for it to come back. Does that make sense? And I don't know what the large chart. Let's see if there's an area on the large chart because, of course, I don't want to trade into a termination condition. So let's put my fibs back on and make sure that we have a clear path. Well, we're at the divergence high. But Steve B, did that make sense? I'm rooting for this bad boy to give me a bounce, to give me a push. And since my smalls are above the divergence high, now it has the potential to break. And it has odds favorable momentum. And it's coming from a termination. I'm really kind of in my best scenario. All I need is a pullback to support inside of favorable large triggers. And I've got my trade. Termination, full reversal, odds favorable. And with this much momentum and my smalls above the area, this area has the potential to break. That's it. So come on, 1-to-1s. Give me some help, right? That's all we can do. Does that help, Michael, seeing it live? Being able to click on it, activate that order. And I'm literally waiting. If the market comes down, it's going to hit my order. I don't chase it. I don't have to hit buy now. And the further these triggers get through this area, guys, the more I like the potential of this trade. Here's mine, Steve B. And then you can just save a copy and do a blank one. But the way I set mine up is I left you guys this. Michael, what's confusing about how we look? You're on 8 and I'm on 7. Do our charts look different or just our buy-sell orders? But it's still, but the words are the same, right? Buy limit, sell limit. See how it says buy limit? Hold on. Sell limit 2, right there. Don't worry about buy stop market. Don't worry about sell MIT. Don't worry about buy stop limit. Sell limit 2, that's all you need, brother. Buy limit 2, that's all you need. Cool. Is it going to come back, guys? Man, I hope so. I know, Michael, there's extra stuff on there, dude. And if you're anything like me, you try to pay attention to everything, right? And one of the things that I really try to do in this classroom is keep you guys focused on paying attention to the absolute best, the most important things. Um, I have people ask me, which fib is the most important, right? Well, the fib that's the most important is the one with all the triggers above it that creates the reversal. So when price reached this fib, that was the most important fib. And then ultimately it became this fib, right? And then this fib was important right up until there. And then it's just in the rearview mirror. So I'm in the moment, odds favorable, everything's up, and that's all I'm doing is I'm just waiting for that one. And man, I'll tell you what, there's going to be times where they don't come get you guys. There's going to be times where they just don't show up. And you're going to be like, son of a gun. Price reaches 1-to-1s, none of the trigger lines break. I've got to let it break before I head off in that direction. And that sure looked like a termination condition reaction. Look at how quickly it spiked down. And the S&P just doesn't want to come. So if the price reaches 45.32, the triggers will be on top of the, what 1-to-1s, Cav? These? Okay. What does that mean for you? Let me see something here. So you're saying if price reaches here, these will be inside of the large triggers? But if price reaches there, really what I have to look at is where are these triggers, right? Because if price reaches here and these are all below, I don't care what's happening over here. This chart means nothing. Yeah, I want it to break through too. You know what I really want, Cav? Is I want it to come back and get me. Whoop, there we go. It got. So we reached the area. Reached the area. Dag nabbit. And guys, that's where I cancel my order and I say, well, they got to my target without me. And one of the hardest things, guys, is when that market goes straight from the fib to the fib and they don't do anything to let us in, it stinks. But I'm going to tell you guys, for those of you that are interested in going a little more advanced when you have your foundation, that becomes an opportunity. When this termination condition rolls everything with multiple divergences, believe it or not, that becomes a pretty cool opportunity as you grow with the software. Just not there yet. Not in the basic form. So, guys, I'm going to start looking at some of the pictures you guys have posted. I know we've gotten a few good ones this morning. We're going to take a look and see what's going on. Cav, you dropped one in here. Let's take a look. Cav, everything set up. You went long and got paid all the way up to Fibonacci resistance. That's pretty outstanding. Every indicator on every chart set up, and you went up, and you were able to capitalize. It can't possibly be that easy, could it? Whoops. And then Finch, I got you right here. You said you had to manage out of this one. Let me go back to it. I thought I had it. There it is. So Finch, you took a short trade directly into all sorts of support, right? Are you with me on this one? I like it. You are coming from a strong top, but aren't you coming from a strong bottom as well? And I like the look, right? But with all of these fibs, Finch, you're trading directly into an area that has already stopped the market in its tracks. But you take it with the perfect entry with minimal risk and manage out at the trouble. Nicely done. This is more of a chart read. This is you saying, with everything red on every chart, I'll take a shot to go retest support. And I really think you did it well. Cav, I did. I was in a long trade, but news was coming up, so I exited because I don't trade news because I never know what news is going to do, and I'm not willing. I have been stopped out of trades for $700 or $800 losses, slippage, trading into news. I'm just not willing to do it. Ron, everything says down, the path is clear, and you just take a little chunk. Nice job. Simming to get the button pushing urge out of the way. I like that. The urge is real, guys. And then Cav, termination, creates the reversal. There's your pullback to the mid-band right inside. Just a little momentum style. When that termination creates the full reversal, no divergence, snap back to one-to-ones. Really nice execution, Cav. Guys, this is a next level trade. This is not a high probability trend trade. This is Cav using the idea that when the market reaches Fibonacci support and creates a reversal, there's opportunities to be had even beyond the high probability trend trade. Nicely done. And then Joel, everything says up from that termination. And I know that you are identifying that pullback to support inside of favorable large triggers. Great chart read. And then Cav again cracks me up. All this gray, Cav. You could put them closer and take a smaller picture. Just saying. You could slide this over to the edge and take a picture half that size if you wanted to. I love you take profits at the potential trouble, but when everything remains strong, you take the next entry and make money. I like it. I say trade it like this, right? But if you wanted to share in the room with a smaller picture so it's easier to read, that would be okay. You're not obligated to. Paul used to do that. Paul used to show me trades with 3 miles on the left-hand side. And I'm like, Paul, I just don't need to see all that, brother. Let's keep it concise. And then Gino, you thought it would work, but it didn't work. You're in Cab. If you don't, it's really no big deal. And then Gino, I don't know what was going on the large chart, right? But 1, 2, 3 divergences says stop hoping. No reason to give that much back. Not a lot of pictures coming through today. Guys, S&P made it right to its target. Crude oil, no reason to go short, right? None whatsoever. Termination condition, 100%. NASDAQ, termination condition, 100%. Do you guys see it? Once you start to get comfortable with the idea that these lines may hold, may break, you're good. And then got in too early, had to make a comeback order. Finch, let's take a look at it. Got in way too early and got stopped out at your entry, right? Got stopped out right at support inside of favorable large triggers. And then nice recovery. And this is one of those reasons why jumping in, especially against two divergences, that becomes difficult. Stops got to go down here. And when you jump in too soon, you start testing your threshold for pain very much. It increases the risk dramatically. And all it does is it guarantees a bigger loser if it's one of the 20%. Nice recovery though, Finch. Really nice recovery. Too much risk. Hey guys, that's pretty normal. I'm going to show you guys a little something. I used to do this a lot. I haven't done it in a while. I'm going to go back to the entry picture. Actually, you know what? I probably already have one saved. I want to share this with you guys. Open up. Here it is. Nope, that's not it. I thought I did the entry picture. Yep, there it is. All right, so let me show you some common stuff that new users do. And I'm just going to use this picture to illustrate it. Whoops. Here we go. So you get the reversal bar, and everyone starts saying, here it is, here it is, here it is. There's my trade, there's my trade. And these are some common things that happen. So I don't want any of you to feel alone if you've done this. I've done it too many times. This smaller, faster chart's going to fluctuate. It's going to go up, it's going to go down. These bars may go up, down, up, down, up, down, up, down 100 times before they finally get into your entry. Very often, I see this little push right here, and I see people entering the market right at the top of that bar, which is fine. If you're going to do it, that's cool, right? No worries. But your stop still has to go where the market shouldn't. So from 79.30 all the way down to '09, you're looking at 20 ticks of risk in this trade. And it doesn't guarantee that it's going to win, right? So if it hits that one, that's a huge loss. But the problem that I see is people go, well, my ATM says 12 ticks. So they put their stop right at support inside of favorable large triggers and get stopped out. And Finch, we just saw that one with you, and I've done it. And I think everybody in this room has probably done it. So if you get in early, all you've done is increased risk. All you've done is guaranteed a bigger loser if this is one of your 20%. And this is real normal for new users. New users get nervous, they get anxious, and that's okay. Take pictures of it, post it in the room, let's talk about it. Because what we're going to talk about when you do that is exactly what Finch did here. He called the trade. The chart read was great. You knew everything that you needed to do. You just got to look and see how it's at the top of that bar. Do you guys? This is how common it is, Finch. I didn't even notice. But right there, it started going up when it didn't hit your order, and you said, oh shit, it's going without me, and jumped in, right? Not that you would ever swear, but I just did in front of God and everybody, and I apologize for that. But that's it, right at the top of the bar. And then there's the stop right at support inside of favorable large triggers. And Finch, thank you for sharing this one because this is such a common mistake for new users that it's nice to see that someone else is doing what you do, right? And then you said, whoa, wait a minute. You kind of get over the loss, and then you've got even more risk on it. And what you've really done here is you've shortened the distance to your target dramatically. There was still plenty of room, but beautiful recovery. That's what I like. I like the recovery. And then Joel, danged old terms. Your Texas fell out. Dang old terms. It's got the potential to break with that momentum with those small triggers through, but it hasn't broken yet. So why not just hang out? Boy, that's a beautiful termination condition. That's textbook. And then GWC, it all says up. You take the entry. You let it spook you into the exiting the trade. Because of a little bounce off of the fib with all the momentum termination. These are the ones that I tend to hold. Beautiful entry. You still got paid. Nice job. But everything set up, right? Those are hard to hold through fibs. You'll get there with time. Ugh, Ron. Killing me, Smalls. Ron says, if I can't go long, I'm going short. And this was Sim. He's learning new stuff. Hey, Steve, thanks for being here, man. Appreciate you. Run a lap. I don't know, when you've got that many fibs and no triggers through, just looking for a little something, something. 2 ticks from the white bar. I'd be curious to hear what made you choose this for the entry. Is it after divergence prints? Is it when the small triggers roll? It's interesting. And then Paul on gold, termination, full reversal, odds favorable, no divergence, looking for the entry. They just went without you. That's just rude. How on earth can you read charts that well and they don't come get you? Rat bastards. Happens, right? And then Ron knows that he has the potential for it to be short-lived. Because aren't we into support with every trigger above? Might be a little soon for short trades. GWC, it certainly adds power to it. Hey, Mike Lynch. Notice that I don't have divergence here, but what I do have is divergence here, right at the fib. Absolutely, because now it's the sellers stealing momentum from the buyers right at a key area. And when you look at it down here, right, not only could the sellers not go any further, but the buyers took it. So I love seeing divergence at a fib. Helps push me up. And these divergences are nothing more than lines in the sand. So when they line up with a fib, absolutely it creates a little extra power. Notice how there's no divergence here. Notice how it pulled right back to support. Large triggers haven't blinked, not even a little bit. This for me is a no way on earth am I looking to try to go short. There's nothing about this yet that says these are still up, these are still up. If this is really going to be a top, my large and synthetics are going to roll. Termination did break, didn't it? It doesn't look like you missed an entry, though. It didn't give you anything, Joel. And now you have weak triggers at a fib. Just great chart reading. And then, Paul, you're like, it's not over. My rules are all still met. Come get me. This is a big thing, guys. If it misses you and you don't chase it, it may come back for you. Keep us in the loop. I can't wait to see what happens there. And then Tony, RTY. You take a momentum style, pop, pop, get paid. And then over here, all the triggers roll up. And you take it right to the termination condition. It's a little hard to read. First one, everything says up, goes to the fib. You let it pull back, don't mess with it. And then when everything says up again, go to the next fib. I like it. Hey, Mike Lynch, perfect, brother. Welcome to the classroom. And every time you post in the room, we'll have a conversation about it. Perfect test. Nice job. And now we're just holding patterns, right? There's one of those 50-50 trades. That area is not broken. That area is not broken. That's 2 areas not broken. That can be challenging. But here everything breaks and it pulls right back to resistance that used to be support. Not a high probability trend trade, but I know some of you guys that look for these opportunities. I don't know what I just put on my chart, but I'm going to try and get it off of there. There it goes. Do you see how the large triggers are still down? See how they're below the reversal bar marker? Guys, this is a huge concept. If price accelerates and hits areas and those large triggers don't blink, if they stay down, if they're further than a full bar away, price is very likely to close that gap. And then Gino, termination, another disaster. So Gino, let's try this, man. Instead of writing another disaster, tell me what you saw. And I know it's funny to write another disaster, especially with an exclamation point, but let's go through it, okay? Can we do it together? I definitely have a termination condition at the top. Are you cool with that? We agree, right? Where do you have strong triggers? Do you have strong triggers on the 13 too? Large triggers are up, small triggers are down. And I point this out, Gino, because on two charts, you don't have enough information to suggest that this area is going to hold forever. What you do have is large triggers are still just crazy up. Are you with me on that? So it's not odds favorable momentum. It's not strong triggers, because the only way that I can have strong triggers, my computer is slow today. The only way I can have strong triggers is if all the colors match, is the easiest way to do it. But you do have, and I like to see both sides of it, you do have the immediate momentum coming off of the termination condition, right? Get off of there. So you do have that small trigger push. So the immediate momentum, that fast moving momentum off of the termination condition looks pretty good. Your smalls get below over here. It looks pretty good. But everything is still up. And then the biggest challenge, Gino, and this is a great chart read, is when we come back to these one-to-ones and my large triggers are still up. My large triggers are still pointed up. And this fib got hit with all of that momentum. There's a good chance we're at least going to retest before we go back down. Because it hit it with a truckload of momentum, and it gives that little push back to support, and the large triggers don't even blink. And that's the S&P, right? And then sure enough, there's your retest, brother. When it hits it this hard, the large triggers stay up. This one is not real likely to work. Not at all. Does that make sense? I like where your head's at, man. I really do. Using that great termination, using that immediate momentum. But if I'm smacking into support and these things stay up, it keeps me on my toes. It keeps me a little bit. Maybe there's going to be a retest. Maybe it's going to break. Notice how all of these are still up as well. It doesn't mean that there won't be a trade eventually, but what it does mean is I can impart just a little bit of patience, just a little bit. You can't tell when the one-to-ones are actually valid. When price reaches them and all the triggers remain above, they're as valid as they could possibly be. How's that? But this one's kind of two parts. Look at your large triggers. They're still up, right? Probably going to retest. There's still too much momentum to the upside. And especially when it hits the fib and the smalls are still outside, you see this a lot. And let me find a picture from the user guide. And this is a great lesson, and this is a lesson that I got from my brother as well, and this is a good one. It comes into the area with strength, pushes up, triggers don't follow. It's likely to retest. That's a pretty good example. This one too, pushes up, retests, triggers don't follow. We're likely to see that one as well, especially when you come into it and the smalls are working their way outside. Let's see if we can find another. Same thing here. When you come into it with strength, see how the trigger lines are still down? It's almost like it sucks it back to it. And of course, it doesn't always happen, but there it tries to get there, pulls back, retests it, pulls back, the triggers don't follow one more time, and then it goes. And we see this all the time. But you've got to see it enough to believe it a little bit. And do you see how price never broke your one-to-ones? It rested right on them. So it's not that these are invalid, but the momentum style trade that you're looking for here, Gino, and I know exactly which one you're looking for. It starts with a great top, right? And then the small triggers come down and the smalls come down with strength. I love your setup, dude, 100%. One little safeguard. Let price break the one-to-ones and pull back to it. Does that make sense? Let it physically break the one-to-ones and then pull back to it. And with this same look, all day long, right there. But you notice how it never breaks them, it only trades to them. So this is pretty subtle. This is nuance at this point. Your probability goes up dramatically if it breaks and pulls back. Otherwise, the large triggers win. See how it kind of did it here? Price breaks, pulls back to the resistance, and then it makes it to those one-to-ones. Good stuff, dude. And we'll see if we can find another example for you. That's just a big old trend trade. See if we had one off the top. Here's a good example. When the termination, Gino, and you start to get all the momentum, it breaks and then pulls back. It breaks support and then pulls back to it. And that's just helps a little bit there. And now we're just letting them sort out. What are they going to do? Hell, I don't know. Got no idea. So it's just chart reading. And it's difficult if you're brand new, but every day it gets a little easier. The things that I recognize pretty instantly happen. Paul said second target hit. Divergence prints, takes out the previous pivot. Paul takes the perfect entry, zero risk on the trade. And then all that momentum, Paul, you said pushed it to your second target. Beautiful. Great trading. Gino, I hope that lesson was helpful, man. Oh, you didn't get the final one? Out with another divergence? Okay. And then Cav, termination, reversal, pulls back, money, money, right at the trouble spot. I love it. Nicely done. Whew, you guys are putting on a clinic today. That's good stuff. Guys, I'm going to run a lap real quick. I got to stretch. Um, I'm going to stretch my legs real quick, refill my water. So what I'm going to do is I'm going to go take a quick break. Going to run laps. And when I come back, it's just the ottoman. So we bought a couch and it got delivered 2 weeks ago or a week and a half ago, but the ottoman was on back order. So I got my ottoman and then I finally got my mattresses for the master room. So don't lean back on the ottoman. No kidding. So guys, I'm going to come back in a few minutes. When I come back, I want you guys to have a lesson plan ready. I want you to tell me what you want to talk about. Um, Post a picture of a scenario. We can go through the spreadsheet, whatever you want. I'll be back this way in about 5 minutes. All right, guys, let's finish strong today. Let's finish strong today. What do you say? Great lesson here on the S&P. I think when those large triggers stay up like that, you really have to go through that recipe on termination conditions a little bit more. And then crude oil, we got that reversal. We got odds favorable momentum, right? This area, 77.21, has the potential to break, but it hasn't broken yet. If it's going to break, we just reached the point where it's most likely to do it. Right here at resistance inside of favorable large triggers, but the path is not clear. And I think that's one of the key concepts, guys, is that we don't have a clear path. So without that clear path, this is not a high probability trend trade. It can't be a high probability trend trade. It's a good look. There's a lot of momentum, right? There's a fib. It pulls right back to resistance inside of favorable large triggers. If you're going to give this one a shot, that's cool, but you got to recognize that 77.22 has not broken yet. And there are no guarantees that it will at all. So it becomes a lower probability trade. You have to take it, you have to manage it assertively. It's a medium probability trade. Does that make sense to everybody? The area is not broken, the path is not clear, therefore, if you take this trade at the absolute best spot, you may have to manage assertively. Good stuff. Gary, you're in. It's a good look. I'm rooting for you. Look at that one. Termination condition to the tick. Everything's starting to roll. Weak triggers at resistance. They're trying to roll. Just holding and hoping, guys. That's all we're doing is we're looking for advantages. So if you got in at the mid-band, your risk is virtually nothing. You're into the trouble spot, guys. Here's your line in the sand. This is the area. If it breaks, should be off to the races to get to 77.02. We're going to know in just a second whether or not that area is going to hold or break. Looks like momentum for the win. Kaboom. Now every trigger's down. Is it, Cav? Let's look at it. Whoops. I'm going to take a picture. And let's go through the whole process. We're going to go through the whole process on this one. And I'll tell you what I'm going to do. Why? Gut feeling or reasoning? I'm going to do this. I'm going to go through the KISS plan on this one just for entry. Well, and Cav, I would bet you dollars to donuts that the scenarios are different. Because a lot of times we're like, well, this is the exact same thing. And then you look at it and it's really not. So let's go through it. I'll put this up here. And maybe this will help you a little bit. And Cav, this is straight from the KISS plan. Is the market coming from a termination that creates a full reversal? Well, absolutely it is. So whoops, that's the wrong one. Odds favorable momentum. Absolutely. Smalls outside of the large on the 5-1? Absolutely. No divergence on the 5-1? Absolutely. From a good top or bottom on the 13-2? For sure. Look at those 1-to-1s. No triggers through, full reversal. And it says enter at the area. So this is the KISS plan, Cav. The KISS plan says that if you can mark yes to each and every one of these, that's a pretty solid trade. It's still medium probability. And notice that it says one area not broken. So Cav, if you go back and look at your 50-50 trades that you've lost, how many of them could you really follow this checklist for? Um, and then divergence printed. If you exited the trade because divergence printed, that's cool. You hit your first profit target. And I think what happens, Cav, and I did the same thing for a long time, is I let what happened in the past affect what happens in the future, right? I took a high probability trend trade at the right spot and it lost. Um, and then when it loses, I start to question the high probability trend trade. So I do it. I like that look. And momentum's carrying it down. Yeah, I like to just go back and, man, this is where the spreadsheet I think pays dividends, Cav, as we grow with the software. Um, because what you find is some of the looks that you think are the same, like some of the conditions that you think are the same. And let's just back it up to this one, where it's 50-50, right? Coming off of a good termination without a doubt. And I think this was it right here, 1036. And there's no divergence, right? Good top, full reversal, odds favorable, no divergence, strong triggers. Um, and then what are the subtle differences? That there's two areas that haven't been broken yet rather than one. I think that's important. Two areas not broken. None of my areas are actually inside of favorable large triggers. And it's these tiny little things that I missed as a brand new user. It's these tiny little things where I would take a picture of this and then I would compare it to this, and I had to really analyze and see if I was missing something, see if there was a subtle difference. And it takes a little bit to burn these to memory. So that's not just a lesson for you, Cav. That's for everybody. And sure enough, guys, momentum carries it to the fib. I was the king of skipping the right trades because the right trade didn't work once or twice, um, and it was difficult. And then GWC, you jumped in, but you kept your stop in the right spot. That's a tough one. Then you get in. Did you get stopped out and then re-entry? And then target, target. Where did you get stopped out at? If you got stopped out at resistance inside of favorable large triggers, you did, didn't you? Got stopped out at your entry. That's okay. We're recognizing a pattern. You like to get in down here, get stopped out at the perfect entry. That's an easy fix, man. That's an easy fix. All you have to do that is a few times and go, whew, okay, I'm done. Um, it's a nice trade, nice recovery once again. Just got to figure out how many of these we can stop giving away because you're pretty much break even, right? That's 18 twice. That's $360 that you lost. And then getting in at 31 to 11, it looks like you made about 400. So you're net what, 20 bucks on the trade? And I think that's interesting because the first time I went live, I would take 30 trades and I would be up 28 ticks, which meant that I was like negative $200 in commissions at the end of the day. I'm like, I was positive today, but I wasn't. Um, I kept breaking even on the right trades because I would take the anticipation. I would take the jumpy trade first. I'm sharing some of the stuff that I've done, guys. I hope it helps. Gary, great execution. Nicely done. And there you go. What good are the rules if you don't follow them? Amen. And now we've got smalls didn't really break through, right? Now we've got divergence. Do you see how this is a very different look? You can't, Michael. I've tried. It didn't work out. Look at the gap in the triggers, look at the tightness in the triggers, look at eking their head through, look at divergence. This is the one that I'll let go every time. But the challenge is, and guys, if you're with me on this, if you've done this before, let me know, is your brain says take it. Your rules say don't. And when it does this, you're more inclined to break your rules, right? When the market does what you thought it was going to do, even though your rules aren't met, you start saying, man, I got to break my rules. I'd hate to miss that one. And you forget completely that that one was easy. And if you just start taking the easy ones, if you just start taking the ones where the advantages are present, it's pretty awesome. Yeah, me too, Joel. You guys know that I teach this class because I've made every mistake that you'll ever dream of making, right? I've made every mistake that you guys will ever hope to make. And then here's that 50-50, right? One, two, three areas, not one area. And it didn't work. And then there's the large above and the small below. All of my triggers are above this fib. Mid band. Guys, that's ugly, isn't it? That's not a great look. Yeah, anything over 300 a day is pretty awesome. Um, it's a good look. Do you guys see the relationship of your trigger lines to the Fibonacci areas? Small and large are above these areas. Large are above the areas. It's not even 50-50 to the downside yet. Not yet. Which means that I just don't have anything to do. And crude oil, they're trying, aren't they? All that momentum into the area, there's your retest, and they'll let you know what they want to do right now. Remember we talked about that retest when we get into areas with strength? And then Cav, you took the pullback directly into, I mean, that's every termination condition known to man, isn't it? So once again, let's do this. I'm going to re-annotate your chart. Broke rule 2 and paid the price. I love rule 2. I will follow it. Smiley face. So I think if you change it from got killed to broke rules, because got killed took the pullback and got killed. The implication is that I did everything right and the software's stupid and the market's stupid. And the reality is you just broke the hell out of some rules there. like you were getting paid to do it. And I think for me personally, that was a big step in the right direction for me, is going back to always annotating the rules on the chart, annotating the reasons why. And I was less inclined, you may not be the same, I was less inclined to write the rules on the chart if I broke a rule. I was less inclined to take a picture if I broke a rule. And I was definitely less inclined to share in the room if I broke a rule because um, shame is real. Like I felt shame. I was like, oh my gosh, I know that I broke a rule and it didn't work out. And what was I doing? And I'm sabotaging my trading. And I'm not. I'm just working through some stuff. I'm learning to trust rules. Yeah. I'm learning to trust rules. So guys, words have power. Annotations have power. Don't just tell me that you got slaughtered. Go through and do the analysis. Talk about what was great. Talk about what was bad. Um, it really does help. If everything that you write on the charts revolves around advantages, it makes it easier. So, good stuff. What would you guys like to talk about? I don't have any rules met on any charts right now. Gary, that's true. Um, or if you begin your phrases, if you begin your annotations with I think, I thought, I hoped, I wished. I do like the Meek and the auctions. Those are fun to watch. Actually, was watching that on Saturday morning. Let a beautiful cherry 442 Olds convertible go for 55 grand. I thought, man, that would be fun to have. So 50-50. Not a termination that created the full reversal, not a good bottom. There is no divergence. There is an area inside of favorable large triggers. On NASDAQ, though, that fights some small triggers. I do like cars. Big fan. My first car, Debbie, was a 1979 Chevy Camaro Z28. It was purchased for $200 from a repo lot. Yeah. It sounds like an old car, but that was 1988, I think. So it wasn't that old. I do. I almost bought one not too long ago. I saw one. Ah, MGB. Heck yeah. And I didn't, and I came so close, but they wanted 12 grand for it, and I couldn't justify it. Not for a 79 Camaro. That was it. Ooh, very nice. 1976 Cutlass, huh? You guys want to see something funny? Cracks me up. This was my brother's first car. Chevy Chevette. You guys remember these bad boys? Did you really? Debbie, do you still have it? Or did you just not give the title up? We used to go cruising the neighborhood in this thing, guys. Listening to Iron Maiden back in the 80s. Good stuff. And then he eventually traded up for one of these. Hard work pays off, kids. Hard work pays off. Kids will buy 57, pull out the 6, and put in a small black V8. Nice. My dad tells stories of having like an old 55 Chevy that they disconnected the rear brakes so that you could just power smoke through. You know what, Tony? I don't have a Lamborghini. I've driven the wheels off of John's, the ones that he used to have. He doesn't have anymore either. When you have back problems, Lamborghinis are not your car. Um, he had a 911 twin turbo that was a much better option, much easier on the back. Now he just cruises around. He's old. He cruises around in he's got a BMW M6, real nice coupe. And then he's got a Land Rover, a Range Rover, whatever, that's like 20 years old. He won't get rid of it. It's got 8,000 miles on it. It's his baby. Bad backs are no joke, Ace J. Novak men have notoriously bad um, backs. So Cav, and not just Cav, everybody, can we talk about this one? And let's do the same thing that we did earlier, guys. I'm going to put annotations on it. The same way we did it on that crude oil trade that Gary took. You drove the Plaid. Did you like it? I've never driven a Tesla. I've got friends that own them and they love them. All right. Did we have odds favorable momentum on the 13-2? I want you guys to see how effective the checklist can be. I think that's a yes. Does everybody agree? Odds favorable momentum on the 13-2? Smalls outside of the large on the 5-1? That's a yes, isn't it? No divergence on the 5-1. That's a yes. From a good top or bottom, guys, that is not a good top or bottom. That is not a termination that created a full reversal. That's a lot of overrun and no divergence or three divergences to confirm that it's overrun. Guys, that's a no. So you have to ask yourself, if it's a no, are the rules met? And if the rules aren't met, is it okay to not take the trade? What do you guys think? If the rules aren't met, is it okay to not take the trade? Or is it better to embrace the idea that I hope it goes anyway? This is the hardest lesson for everybody to learn, guys. The hardest lesson that you're ever going to learn as a day trader is that it's okay to do nothing, that it doesn't cost anything to do nothing, that it's better to not take iffy trades. But do you see how the checklist said no? But over here, the checklist said yes. Said no, avoided a loser. Said yes, took a winner. All you have to do is take enough losers until you get sick of it. And then you'll start following your checklist, guys. The checklist is the best. I'm not afraid to admit, guys, I have days where I just go crazy. I go gangbusters. Where I start breaking my rules and I start trading chart reads rather than rules. And I have to check myself. And I'm just like, oh my gosh. How many rules can I break in a 5-minute span? How many revenge trades can I take? I'm human like the rest of you guys. But the more you study, the more repetition, the more times you see a pattern, the easier it becomes to recognize. And I'm just rambling. There's nothing to do in any of the markets. I'm going to give you guys a gift. I love to give you gifts. This is a book called Emotional Free Trading. Outstanding read. Outstanding read. You'll finish it in a couple hours. Jill, you're welcome for the checklist. Thank the Nexgen user that chased every trade in the world. He helped me build it. Guys, Emotional Free Trading is an outstanding book. It just talks about the psychology a little bit. 7 Habits of Highly Successful Traders. My brother told me, he goes, read this every day for 30 days. It'll change your life. One-to-ones, every trigger's above. Look at the bounce. Guys, the psychology of trading is a very big part of it. It's what I teach isn't difficult. I really don't think it is. The basic looks become pretty easy. Putting them together isn't huge. And then the key is just doing nothing when there's nothing to do. That seems to be the one thing that escapes most of us. I know that my worst days come when I break rules, and my best days come when I follow them. Um, and I try not to let there be too much in between. And on the days when there's in between, it's a break even day. So um, we're official in ramble mode, guys. To minimize your learning curve, post your pictures of your trades in class. Every trade, win, lose, or draw. If you win and the rules are wrong, you may have a short-term victory, but a long-term failure. How are you going to know the difference? I didn't know the difference in the beginning. To be sure, you need feedback. I'm here to help, guys. I'm here 15 hours live every week. I'm here 15 hours live to look at every picture that you post, to answer every question that you have. Um, if you place a trade on the simulator, participate in class, there's no risk of loss or capital, guys. You need someone to tell you what you did right or wrong when you're new. It's part of the educational magic. And Ron, I know what you're going at. I'll use so you don't have to type it out. Guys, have you ever watched geese fly above? You ever notice how one side of their V is always longer than the other? Do you guys know why? Anybody? Happens, phenomenon all the time. One side's always longer than the other. Direction? No. You got okay, I'm gonna give you the answer. You ready? There's more geese on one side, guys. That's it. There's more geese. It's obvious, right? Ron sent me that probably a year ago. And I overthought the heck out of it. I tried to come up with every answer other than there's more geese. And I think that that's just it. Keep it simple, guys. Let it be easy. Keep it focused. I fell for that one just completely. And Ron, is that right? That's an old management trainee trick, trying to keep people focused on simplicity as opposed to overthinking it. It's brilliant. I need a picture of a goose. Jose, fit the rules 100%, right? Easy money. How long did you have to wait for that one to set up? That's beautiful, dude. That's everything that we talked about. I just did, Ron. I just did. It's our desire to be smart, right? It's our desire to be smart that makes us overthink things. It's our desire that if I can give you an answer that sounds smart, well, then I must be smart. So why not keep it simple? That's just, this is where he marked where his trade is. These are just the reversal bar marker on the large chart. His chart prints them on the way down, Pedro. Not anything that you need. But Jose uses it, I believe, for stop placement, if I'm not mistaken. And then Gary, termination, termination, termination. You took a long off the termination. I'm not sure what that one is, but I like the way you did it. Everything still says up. You're like, it's not going down. Let's go up. Nice job, Gary. It's fun when you find your groove, isn't it? It's fun when you find your groove. Terminations for the win, guys. And then Ron's working on something that says when you get divergence from a key area, see the overrun difference? 1, 2, 3, 4 divergences on a little bit of overrun sets us up to push the other direction. Did you guys notice on the other one where we were anticipating more down potentially that there were no divergences down here? That's not it. that there were no divergences down here, suggesting that that was overrun. But if you look at crude oil now, multiple divergences suggest that this is probably just an overrun of a key area. And now the market's starting to head the other direction. Pretty awesome. And then Ron, it worked again. But which one, Ron? Which one did you use? The higher divergence? Okay. Ron says when he gets a higher divergence from a key area, it's likely to make a reversal bar. And these are kind of the things, right? So when we get lessons, and this is what I did with my brother this morning, guys, I'm not going to lie. So this morning with my brother, I took probably 50 pictures, picture after picture after picture after picture, because he's teaching lessons. For those of you that don't know, he's doing a 5-day seminar for people that are coming through, and what he's teaching, he's been sharing with me for the last 2 months as he studied it. And I've kind of ignored him because when he gets excited about something, I get excited and then I blow out accounts trying to do what he does. So this morning I committed to learning what he's teaching, and I'm going to get good enough at it to where I can teach it. Um, but I've taken no less than 30 pictures today, guys. 30 pictures. And then Tony, short, out, everything says down, short, love it. Oh, you were short up here somewhere. 130, 150, 130, 150. So it's just a big trend trade on a 13.2 that you picked up on the 5-1. Your charts look a little different. It's hard for me to gauge. That looks like a long. Oh, you're long? No, you sold. Buy stop. Oh, you've locked it in. I got it. Ugh. So you're short and you've locked in profits into the trouble spot. And you're short from up here because it's just a big trend trade on the large chart. Nice. I like it. I was trying to put these with this, and that's where I got confused. It's just a trend trade, right? Isn't that funny? Gary, when you listen to the trading room, you take bad trades instead of following your rules. I do too. Guys, one of the most damaging things you can do to your trading is try to be somebody that isn't you. Is to try to take trades like somebody that isn't you. And I've done it. I simmed Ron's trade for a whole day. I took it on simulator and I got my ass kicked 9 out of 10 times. I didn't understand it, but I knew that he was winning. Um, and that's why, oh my gosh, I had somebody in this room get so mad at me. I told them, don't call longs and shorts, don't call trades in my room ever, because you may influence somebody. And frankly, if you're in this room, you probably shouldn't. Neither resistance or support held this area in the past. Both small and large above resistance, so it becomes support. With price below, should this be considered a termination area? In other words, if it was resistance, would not trade into it, but until triggers get through, it's still support. Pedro, this is a great question. Um, Take care, Tony. All right, Pedro, here's what we're going to do. Um, Could we keep it super simple? Tony, take care, brother. I'm going to try and keep it as simple as I could. Michael, when you've proven that you can win more than you lose. So Pedro, just thinking about it, because you're looking at the blue, right? You're looking at the blue over here, and you're talking about support and its support, and is it going to stay support until forever, right? And over here, that's blue, that's red, right? So it creates confusion. Is it support or resistance? And here's the beauty of what we do. Whoops, Pedro. What happened 30 minutes ago doesn't matter. What we're doing is we're looking at the now. Um, and I'm gonna kind of go round robin here because there's a couple different things that are real important to remember. The first thing is that the large chart defines your areas. The large chart defines support and resistance. All right, let me get through it, and then I think we're going to answer your question, okay? So I'm looking to the large chart for areas, which means that the area in question are these fibs right here. Can we agree to that? I just want to make sure that I don't lose you. The areas are in question are these fibs, right? And you're wondering because you're focused on colors. It's support, it's blue. Am I correct? I want to make sure that I don't accidentally lose you here. Focus more on the colors than anything because blue is support, right? And red is resistance, and that makes sense. The past will have nothing to do with it, and that's kind of the beauty of it is areas break all the time, Pedro. Um, because what happens, and let me show you. Let's pull one up big. This support held to the tick back here, right? And it overran here. And dun, 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 they are key areas. I'm looking for an example where an area breaks and acts as support, and then it comes up. And what you find is what happens in the past will have an influence, but with your rules, you can be in the moment, right? So here resistance holds, and here resistance breaks. And that resistance went back all the way to here. Um, trying to find examples. Here resistance holds, resistance holds, resistance holds, resistance tries to hold, and then ultimately it breaks. Um, so what happens is if you let it be a little bit more right now, if you let it be a little bit more about what's happening now rather than what's happening, you can go into that simple idea of what it means for whether or not I'm looking for a trade. And the idea is that when you reach a fib, when you reach an area, look at your triggers. If the small triggers smash through, it has the potential to break. It really does. And if the small triggers remain below, you're not taking a trade yet because you just don't know. And if the small and large get to the other side, well, then we consider the look broken. So what you had was the small smashing through and the large still below, which was, it's a great look for the potential to break. So because it's not broken yet, I don't have a clear path. I don't have a clear shot like I do here. So when the path isn't clear, it's real important to me that I don't sacrifice things over here on this chart. And divergence is a huge killer of these areas with the potential to break. Not coming from a termination condition is a huge killer of these areas not breaking. So even though there was that indecision here, what you're looking at here is the buyers made it and the sellers fought back, and the buyers and the sellers, and see how their price action dissects the fib. It just reminds us that this is where decisions are being made, right? All the way across the board. You can see the fight that happened, and the sellers took over and pushed down, and now they're back into their fight spot. and the buyers are trying, and the sellers may fight back. And we just don't know what's going to happen. And our trigger lines say that it has the potential to break, but until they get to the other side, let's sit on our hands. And is this it right here? I'm not sure if that's the right one, but this is one of those great instances where you can kind of see that the trigger lines, whoops, they're trying to break, and ultimately it looks like the sellers took over and pushed it right back down. So we can do it in the moment, rather than focusing on the colors or anything like that. Did I completely just ramble and miss the point of your question? I hope I didn't. Okay. Sometimes I do. Sometimes I get in the thought. If I ever ramble, we need a safe word, right? Um, Took a 50-50 trade with a pullback into resistance and large trigger on the 5-1. You got out before divergence. So when everything went red, you went short, right? Into the termination. Safe word is geese. I love it, Phil. You're banking on those smalls getting to the other side, right? But everything is red, so you say, I'll take a shot. Split triggers, I'm not sure where it's going to go. You're just trading that resistance with the hopes that it breaks, and we'll see what happens. But it's that aggression getting out rather than the hope that works. And then you're long over here. I think we talked about this yesterday. If no divergence is a key factor, wait and see if you get it, right? Rather than just trying to take a momentum style. Nice stuff, Cav. And then ultimately the sellers do win, don't they? Pretty cool. And that was yours right there. Look at the trigger line position. Do you guys see the difference? This was a lesson that my brother gave me. And I love this lesson, and it was huge for me. And let me share it with you guys because I'm trying my best to come up with things to talk about. And this takes a couple different things that we've seen today and things that we've talked about today. I'll use white over here so it's easier to see. When the market smacks into fibs with a lot of momentum, right? We're not looking for the first short because the large triggers are still up. There was tons of momentum. There's a huge amount of pressure. And you see this a lot. Pull back and then retest. Look at the triggers on the second push. And Cav, I don't know if you noticed this in the moment, but guys, do you see how the smalls are below the large? Everything is up, but there's no strength at all in that push coming into the retest. There's no indication that this area is really going to break. So when I come back and I get that retest and everything rolls and gives momentum, Cav, you nailed it 100%. These are the ones that tend to run. These are where you can ignore those one-to-ones a little bit. The difference is here, everything is still strong up, everything's still cranking up, but here, look at the reaction coming off of the fib. Do you guys see the difference? This one says wait, this one says nah, it's not holding. And because this one says nah, it's not holding, this area becomes more likely to break for the continuation of the downside. Don't lose. Crank up the MES, Cav, and take a trade a day. How's that? Thanks for hanging out, Ron. I always tell people just do what you're doing because no matter what you do, right, you've got to be able to stay consistent. Um, Maybe go to the MES, go to the micro crude or something like that, but really focus on following your route on your rules. Go back and look at your losers and annotate your charts and see if there's something that you could have avoided. Because I'm going to tell you guys right now, when you pass that apex and you hit your qualification goal, you have to be able to recreate it over and over and over and over again. And if half of your trades were luck, you've got to know how to pull that luck out because everybody tries to abandon their plan once they get qualified. I did. I blew my first one out almost instantly. Um, and I'm not saying that you're going to do that. I'm not trying to put bad juju, but go back to your losers um, and see what happens. Odds favorable, but not a clear path. You take the pullback to the large triggers, Joel, and you get out of trouble. I like it. Termination makes the trouble spot. You wait for the pullback. You get in low risk, and you don't hope. Pulls right up, and then it heads back down. Nice job, Joel. That's heads up trading, man. That's a good chart read. I think one of the most underutilized tools, guys, is going back and studying what we've done. Studying what I've seen, what I've done, where I've been, so that I can get to where I want to be a little easier. The area broke. The momentum is down. The triggers are down. If you took your entry at resistance inside of favorable large triggers, your risk is already established. Weak triggers at fibs. They're killing it to the downside, aren't they? Potential to break off of the termination condition. Anybody learn anything today? I feel like we had some good lessons outside of the normals today. Um, is there anything you need a little clarity on? And guys, I got to tell you right now, from the bottom of my heart, I appreciate the questions that you ask because every time you guys ask questions, it really does. It makes me a better trader. It makes me more aware of what I'm looking for. It forces me to read my charts a little more in depth. Um, so I really do appreciate it very much. Just waiting for rules to be met, right? Has anyone been sitting at their chair for hours here and not gotten up and taken a break? Hope not. Take a break. You're relearning not to trade in determination conditions. It rarely works. Debbie, it's one of those ones that works just enough. I had this conversation with somebody once. I was like, the market's going to let you get lucky just enough to get you to break your rules. And then what happens is you break your rules and you lose. And then you're like, but no, it works. Your body doesn't, your brain doesn't remember the 173 times terminations stopped the market in its tracks. Your body remembers the one time that it broke, and hope kicks in full tilt boogie. Man, I hope it happens again. And it really doesn't. I was the termination king. I was so great. Here, lava lamp, I'll do one better, man. Let me just give them to you. Both of these are great reads. There you go. One is emotion-free trading. And to be honest with you, that was my favorite one. And there's a phrase in there. In emotion-free trading, I'm just gonna see if I can find it real quick. Um, there was a phrase in there that said acting in your own best interest. And I don't know where it's at in there, but it's in there. But that phrase, acting in your own best interest, taking care of yourself, looking out for you, um, God, that was huge. Is trading into a termination condition, acting in my own best interest? Is fighting trigger lines, acting in my own best interest? And when you start giving yourself some importance, I think it helps. I really do. Um, Once again, market turning off of fibs. There's that 50-50 with divergence. One area not broken, two areas not broken, three areas not broken. Ah, ah, ah. Who's taking the short? Hoping that three areas break with divergence. You took it, Cav? All right. Let's see what happens. I'm rooting for you, brother. I am rooting for you. Does everybody have a plan written out? Do you have a plan for what you're willing to take, what you're not willing to take? One of the things that I had a gentleman tell me, I met a guy out at the races in Austin, and he's been with Nexgen for 15 years. And he told me that his trading changed drastically when he finally put pencil to paper and wrote a plan, because it kind of pulled the hope out, right? And it said, I'm not hoping trades work anymore. I'm taking the trades that have been proven to work. I'm taking the trades that have shown me through back testing, through repetition, that they win more than they lose. And he said that was a huge turning point in his trading. So if your trades don't look the same, one of the things that successful traders tend to have in common is all of their trades look the same. It's not 17 different looks hoping that one of them works out. It's literally the best look. And from that best look, they establish a plan, something that they can repeat over and over. So, signs that you're maturing as a trader, and I think we all go through this process. When you manage risk before you manage reward, when you say that the conditions are proven to win more than they lose, you're managing risk. When you have the advantage of momentum, no terminations, when you get in at the best area, you're managing risk, and then from that entry, you begin to manage your reward. When you're relaxed making trades, when the nerves don't jump in because you know that you've seen that pattern 100 times. And I'm gonna tell you right now, the more trades you're taking, the less relaxed you become because you'll start confusing rules from different trades. Not forcing or chasing trades. We saw that a couple times today. Chasing trades and then getting stopped out at the perfect area for entry. Not using it for adrenaline or entertainment, guys. This is a job. Follow your trading plan. This is what it takes to get in. This is what it's going to take to get me to pull the trigger. Hardest thing you'll ever do as a day trader is follow your trading plan. And then, of course, your worth as a trader and your worth as a person are two totally different things. Um, so, do you have a trading plan? Have you written out what it's going to take to get you into the market? And if you haven't yet, or if you're losing a certain type of trade more than another, right? Everybody that I get says, Mark, I lose that damn 50-50 trade more than I win it. What am I supposed to do? Well, you're supposed to go back and study the 50-50 trades that are losing. You're supposed to go back and look at them and say to yourself, what am I doing? What's the common factor? Is it divergences? Is it multiple areas that aren't broken? Is it not coming from a good top or bottom? Am I trading 50-50 trades, exercising hope, or am I using a pragmatic approach? Um, and again, I don't ever try to put voodoo on anybody. But I have three areas that haven't yet broken, and I've got a loss of momentum. And and I hope this one wins for you, Cav. I'm rooting for you. But the 50-50 that this good top broke were these one-to-ones, and it was this divergence low, and maybe even this one. But there's a point where you're running through doors where you start having challenges, and you're still in it, right? You're still in the game. Heck yeah. Go, cat, go. And I hope it works because it's coming from that termination that created a reversal. So it is what it is. It's not for me to say. I'm powerless over the market. My opinion means absolutely nothing to the market. It couldn't care less what I want. So um, I behave accordingly. Anything you guys would like to talk about before we call it a day? It's great to see you guys in here. It's nice to hear some of you talking that don't normally talk. Go look at the other markets and see what they're doing. This one, not even from a good bottom, right? Off it goes. That's crude oil. If you took it, you had virtually no risk. I'd take two or three ticks on that one all day long. Kind of pretty. The S&P, it's trying to go up, but it's 50-50. I've got split triggers. Can we talk about split triggers for a second? At the time of the reversal bar, from the top of my triggers to the bottom of my triggers, look at the space. Do you guys see that? This is my highest point of support. This is my lowest point of support. Is there anybody in here that's comfortable? Uh-oh. You're okay, Dwight. We said the same thing. Look at the range where this may continue from. Who's putting their stop all the way down here, hoping? That's a lot of risk, isn't it? You guys see how big the window of opportunity is with split triggers? Sure is nice to have them concise. And then not a termination, reaches the midband, large triggers don't follow. What do you guys think? They're going to make it down to that key area that they couldn't quite get? They might. Go, Cav, go. I was, how old am I now? I was 48, lava lamp. Um, I had just had my second spine fusion, and I was a restaurant manager. I was a general manager for a restaurant here in Texas, down in Houston, on a great path. And I liked what I did, and I was good at it. But my second spine fusion took me out of the game, and that's when I started learning the software. Um, and then the second half of that story that I like to share is when I started, my brother gave me this list. This is literally 3 years ago. And he gave me this list, and he said, hey, write down some rules, take pictures of the trades, post in class. And if you do that, you'll get to where you want to be. And I fought him tooth and nail, and I gave away an awful lot of money. And I did it to the point to where I actually asked him if I could teach a remedial class, if I could teach that first hour. And I did it in the afternoons. And I started teaching people how to avoid the mistakes I made. And I can tell you without question that this path right here is the one that's the most fought. I did it. And if you stick to this, Debbie, you were in my 101 class, huh? All it was the first hour. It was taking people new to the software and giving them just a really solid, basic foundation. Gave them something to fight intelligently. There's a few of you in this room that were in my class back then, and it was a lot of fun because we were all kind of spinning their wheels, and we have, haven't we? So I'm telling you guys, there's nothing that you can break that I haven't broken. There's no mistake you can make that I haven't made, and it's okay to share every one of them because everyone in this room, whether they admit it or not, has made the same mistake. So what we do is we just keep talking through it until they go away, and it works out. Nice. So where was your first trouble spot? Right there at 2065, right? All that momentum. There's your retest. Cav is beautiful execution. And notice how it started from a good top. So good stuff. Guys, that's it for me today. Thanks for hanging out.